Commercial lenders in the country are announcing measures to offer relief to customers as advised by the Central Bank of Kenya. Already a number of banks have announced a 3-month holiday to borrowers on request. This even as NCBA Group says more than 20,000 jobs will be lost in Kenya as a result of the COVID-19 pandemic. Faisal Ahmed has the details.
Your understanding.
The move by commercial banks to offer relief to borrowers follows a decision reached by the regulator, Central Bank of Kenya, and presented to President Uhuru Kenyatta a fortnight ago.
If you have a loan, personal loan, and you are getting difficulties, particularly because of the pandemic, directly or indirectly, you can go to your bank and they can discuss with you extending it.
Unfortunately, may be forced to take half pay or may be forced to be laid off for a period because hotels are empty and so on and so forth. So again, your understanding in helping those Kenyans overcome any hardships that they may have as a result of that, again, is something truly appreciated.
Already, Standard Chartered Bank has indicated that it will give 3 months holiday to its borrowers who reached out. The bank also says that it will be able to give room for payment for interest alone on mortgage for 6 months. On Sunday, Stanbic Bank also announced a similar move of a 3-month holiday effective 1st April for both SME and personal banking customers.
And making the right plan.
Speaking at an online economic forum he hosted on Friday, NCBA Group Managing Director John Gashora indicated that the lenders were keen on lowering non-performing loans on their books.
By and large, hate non-performing loans. We don't want to see them. So it's in our interest to assist our customers to go through this period as opposed to them becoming non-performing. I'm talking about those borrowing customers. We have a lot of non-borrowing customers. But for the borrowing customers, we wouldn't want them to get into the non-performing category. So it's important us to work together with customers to get through this period.
But even as banks come up with reliefs, the impact of the COVID-19 on the economy will largely lead to job losses. During the NCBA forum, it was estimated that at least 20,000 jobs will be lost. This further dragging down economic projections that had been hinged on better performance than in 2019.
In my view, when it first started, I actually thought that at the best it would simply slash growth for Kenya by a small amount, and then after some time, there would be. I think some of the scenarios that you've raised suggest that there's a small but real chance that actually the economy might not just slow down, it could even contract, depending on how far this goes.
Most organizations, especially in the financial services sector, posted positive growths. Firms such as Britam Group recorded an all-time net profit of 3.54 billion shillings, recovering from a loss of 2.21 billion shillings it posted the previous year. That 2020 could be bad for business is also explained by the latest Stanbic Bank Market Purchasing Managers Index. The headline index fell sharply to 37.5 points from 49 in February as businesses marked steep customer turnout declines. Many of the surveyed businesses noted that worries surrounding the coronavirus meant that customers cancelled or reduced new orders to see sales fall sharply, with a rate of decline being the second fastest on record. This mirrors the NCBA projection that should the COVID-19 persist throughout the second quarter, GDP growth could decelerate sharply to 3.2% in 2020, a sharp downgrade from the 5.7% projection in January 2020. Faisal Ahmed, Citizen TV, Nairobi.